Hello again, traders. Right, this is a totally, literally off-the-cuff video I decided to make a minute ago as a result of a question I answered on Twitter to Hyper about the dragon. So, as I answered on Twitter just now, the dragon is really used for a visual aid, and if you need to know how it's used, as it were, the basics, you need to go to Forex Factory and look at Sonic R Dragon thread from DJ, and don't worry about all the other stuff, all the PSA, VR or whatever it is, and soldiers and all that malarkey. Just concentrate on the entry on the dragon. So if I zoom out a little bit, basically what Sonic used to say is you poke through the dragon over this side. Just to zoom out again. There's a good example. You've got the dragon being poked through, then you've had a pullback, and then finally price breaks the dragon, and as you can see, it absolutely collapses. The 34 EMA is how the dragon is made. I've talked about that in previous dragon videos, Sonic R videos. 34 on the high is the top part of the band, the close, I think that is, and the low. So you've got the three, but you'll play around with them. If you haven't got MT4 and you need it on something like TradingView, just use 3 different instances of the 34 EMA, and that will give you a band. The 89 is this one, EMA, and the price reacts to these two EMAs with, uncanny repetitiveness. So, but they can be anything. This could be a 33 band, this could be the 91 or 90. EMAs, quite frankly, are a very, very vague idea of using price action. Don't get all hung up on a 200, 100, 300, whatever. Just in my opinion, candlestick levels and line chart levels are far more valuable. But these EMAs do have their use, and the reason I've made this video is to explain what significance they have for me. So let's go back to candles, let's zoom in again, and you'll notice how the price has bounced around on the 34 or around the 34 and bounced around on the 89. Now, you can't deny that is interest. I'm talking about this little thin, the two thin lines. You can't deny that must have some value. So when price is bouncing up here, it's hit a level. In this instance, the dotted line is the daily open line, and it's bouncing around. Look where it has a problem, on that 34.89 level. And finally, it pushes up through. And what I'd need to confirm that this is a good possible break is something on the multi-time frame indicators that I use. So we all know about those. Again, I've got over 930 videos on my YouTube channel to accompany this one. You just need to be a part of my private group to get access to the majority. So there's your 34, the little thin grey line. There's your 89, and this was a bad example of an area to look at price on these, because it's the end of a busy I was going to say mentally busy, but crazy busy week. So we'll zoom out again and we'll have a look at possibly some better examples. So when price is around this 34, look what's happening on that 34 there, flat as a pancake. Then it breaks up, and I mentioned I like to trade clear air. Well, we've got our momentum triggers. We've got a 3CR there. We've got sideways, which I'm now using this thing, the multi-time frame RSI, although it still needs a bit of work, to see these gaps. Sideways. There's a lump of sideways motion. That's what I like, a big area of boringness, and then we get some power, and we would have the traditional RSI histo showing us the correct way to do things. This is why this needs work, because this isn't right at the moment. That should be triggering green at 20 above, and it's not for some reason. So as I say, it's a work in progress. So back to the 89s and the 34s. So you can clearly see we've got a problem here, and we should be waiting for everything else to agree that we have the breakout. Then we've hit the level, so I would trade to that 89 sometimes, use it as a target, and then we've broken out and we've continued up. But once again, they're in the back of my mind, and I've never mentioned this before in a video, which is why I thought it was a good idea to make this video now. So when we're up here and we're bouncing around on the 34 there, you can clearly see that. You know, we've got a signal to go long, great, probable good trade there, and then look where it's bounced again, 34, then it's broken the 34, which is, you can't unsee this stuff once you've seen it, in my opinion. I will say this though, these indicators like the Sonic and like the SS support and resistance, Asian high, Asian session low, daily open, pivots, I don't talk about that often these days, but the pivots are on my charts as well. All these levels and indicators have been on and off my charts more times than I can possibly say, because early on they may well confuse you, and you may be in that position now. Probably, if I'm truthful, in fact the dragon only came on after 18 years, if you like, a couple of years back, or as recently as me finding Twitter again, due to COVID, of course. This blue line is a manual line I put on the chart to trade gold, so I can delete that. But everything else on here is actually automated. It's all indicators, nothing manual on there at all. So all these arrows come from things like the RSI Histo EA, RSI Histo indicator, should I say, alert. But getting back to the dragon, so to answer Hyper's question, I don't use the dragon really in day-to-day trading, although you can't unlearn the fact that the price has broken up through the dragon clearly, and then when it comes back to test it, that's when it takes off, which it did. The EMAs, the 89 and the 34, as you can see here, when it's all bunched up, that's natural, price will just be flatlining there. But when it comes into its own, not so much there, but you can see here. So we've got, you know, all these things combined. The 2B reversal, it's a bit of a messy one, and then the break up through, you know, test that 34. Finally, it's broken up nicely with clear triggers and 3CR there as well, and pushed on up. And where does it stop? The 89. And it's tested. It's bounced between the two. You know, if you take the wicks off, you would see the line chart there. In fact, we will. That is respecting both levels. And then what does it do? It comes up, it breaks it, comes back and tests it, and then takes off. You cannot unsee this stuff. So as such, you know, it's tested it there, pulled back, broken up, come back and tested I'm talking about the 34 here, and we've had multiple tests of the 34 and the 34 in the down move. It just is too good for me to take back off my charts now. And another thing we talk about, you know, in a downtrend, where does it come back to? Test the 34, test the 34. And you may well then get a big pullback, I often see, and it'll go through the 34. And where does it come? Because we can see this clearly in a downtrend, because the EMA is in a downward slope. So it'll come back and most likely test the 89 EMA. Then all the momentum indicators will come back in alignment with the short move, because this is clearly a downtrend. It's just a nasty old pullback to fake in the long traders, the bulls, and then down it goes. So, and you see that so often. Here's a bit of no, that's not an example, is it? It's in an uptrend. There. So this one has actually pulled down to the 89. It's pushed back up again, then it's pulled down to the 89. It's pushed back up, but it's failing to make higher highs, and then finally it breaks down again. So, and in this instance, it's used the higher part of the 34 EMA band, the dragon band. So hopefully that has clarified why I love the 34 and 89 EMAs. Look there, hit the 89, come back, tested the 34, push through it, in fact, a little bit. Go back to the candles. And then bounced around on the 89 up here, and off it goes. So that's a perfect example of what I'm seeing time and time and time again on these two skinny little emas. So hopefully that will clarify. Look, Tesla 34, it's come back, an ABC reversal. I talked about that yesterday as well, something I don't mention a lot. If I'm thinking about possibly a continuation to the downside, I do not want to be thinking about entering on that swing A, because I will get caught. I've done it. Ask me how I learnt this important lesson. It's because I've seen it happen so often. Get caught in a short, and then up it goes to make swing C. Swing A, swing B, swing C. Swing 1, 2, 3. That is a 2B reversal in its own right there, which is clearer to see on the line chart. There's the low, there's the break, there's the pull back up, break up, there's the continuation. That is your 2B move. So ABCs, 1, 2, 3s, pullbacks, look for that third swing, watch out for that before considering getting into the short. But notice how this protects us against that as well, and we get the red come into the market when it finally does give away. Red on the indicators I'm talking about. That's the TMA slope that I absolutely adore for divergence and added confirmation to the down. That's why I have all this grey here and not graded colours, because when I'm not interested in all this stuff really, although I do watch that when I'm looking at divergence. All I'm interested in, the power. When the power comes in, that's when you can use the TMA. Look, so you might use this. It might not change as early as the RSI, but what it does do is then allow you to get back in using the lower time frames, because this is like a delayed reaction power entry. All these little things that I forget to mention that go on in my head as I'm watching the charts. There's that ABC reversal. We've only had swing A there, so if you're thinking about going short here, although the indicators would have kept me long, or kept me out of short should I say, watch out for that third swing. So there you go, 3 swings down. Swing 1, 2, 3, and this one has broken the 34. It's gone up to test the 89. It's got broken through the 89, come back to test it, up it goes. That's why the 34 and 89 EMA are left on my charts. They are, in my opinion, priceless. So thanks for watching. Have a great weekend. It is Saturday morning. Don't forget to have a nice relaxing weekend.